Hello, this is the Daily Forex Report for August 3rd. We're going to go through and take a look at the US-Japanese yen pair first. This pair closed lower today, did break previous support, closed below it. We are looking for it to continue to the downside. If we do get a pullback, look for it to go up to 87.08, possibly as low as 85.09. Look for some resistance around 86.25 and look for some support around 85.50. Okay, now the Euro-USD pair, this particular pair, hang on one second. There we go. This pair closed higher, is continuing its run to the upside. Look for it to potentially go to 133.33, possibly as low as 130.61. Look for some resistance around 132.75 and look for some support around 131.45. Okay, now the pound US dollar pair. This particular pair continues to move to the upside. We are looking for this pair to move potentially as high as 6,000 and find resistance there, possibly down to 158.50 and find support at that level. Now the US Swiss, this particular pair created an inside bar doji bar, which could mean the reversal. Potential reversal. Overall, this pair is moving to the downside, but at a very slow pace, moving sideways overall. Look for it to potentially go as high as 104.76, possibly as low as 102.87. Look for some resistance around 104.25, and look for some support around 103.45. Okay, as far as news announcements go, we have the Australian Bank releasing the quarterly monetary policy statement, and that's going to be released at 9:30 p.m. Eastern Time. That is for August. No consensus given on that particular news announcement. Now, let me show you just something that I like to do from an analytical standpoint, just technical standpoint as well. We're going to take the Euro-USD pair. This is an after-the-fact example, but nonetheless, it illustrates a point, a way basically of looking at the market. I'm going to use the Fibonacci retracement. We're going to take it from the high down to the low here. Actually, we're going to do this on the week time frame, so you need to change to the weekly time frame. Make sure you're there. Then you grab your Fibonacci retracement and go from the most prevalent high to the most prevalent low. You can see that we're above the 23.2 percentile, headed towards the 50. You can also see that around the 50 mark, we had some sideways markets that occurred, so a little bit of a pullback. Now, the other thing I like to put on the chart is Fibonacci Fan, and you do it very similar way. There we go. And bring it on down. And this gives us another set of lines, very similar, just in a fan type arrangement. Now, what I like to do, and you may want to write this down, is look for the 23.6 to the 38.2 range. So basically, you start to get a pullback, and then you measure your Fibonacci lines. Okay, if it does retrace, how far will it retrace? Look between these two lines. Then I like to look on the fan between 38.2 and 50. Basically, it gives us a block right here of time. Now, once you have that, ideally we're looking at this chart this week right here. So we're going into this next week. Maybe we're looking at it on a Friday, and we're going to make the assumption that it's going to continue to the upside. And where do we potentially want to get into this trade? Well, we can see we drop down to the day time frame to get a little bit better view on where we should enter. I noticed that there is a pivot high here that's been created. We have one bar to the right, or to the left rather, that has a lower high, and one bar to the right. So we have a one qualifying bar pivot reversal, and we can draw a line there, horizontal line, 1 pip above this session's high. So that's a decent place for an entry. Where should a stop loss be? Where is our potential exit? Well, you can take a basically a trend line and draw, since you have this box here, draw it from one corner to the next right like that, right through the middle. And at that point, you can determine from your black line or where you've defined your entry to this other line about how many pips you're looking for, 328. So we could look to buy in right here at the break of our pivot high, our one qualifying bar pivot high. But where's our stop loss? We could put it below this low. That's the most recent low. That'd be 185 pips. We could also put it here below this area of support, and that'd be 252 pips. But if you want to get a little bit zeroed in a little bit better, go ahead and drop down to the 4-hour time frame. You may have to adjust your chart a little bit so it's not confusing, but basically you're looking for an area. Let me zoom out. We're basically, here's our pivot reversal on the 4-hour, and this is our point of entry, and we're looking for it to go up to right here, 328 pips is what we're looking to gain from this trade. So we know our upside potential. We have our exit in pips. We have our entry in pips. Now, where should we place our stop loss? Well, dropping down to the 4-hour time frame gives you a little bit better view of what's going on from a support and resistance standpoint. You can tell that we have support here, we have support here, here, but we also have some resistance, which now could be support. So that brings us up a little bit closer to our entry, which is what we're wanting. We had that same thing here. We had resistance, which would now be support. So this would be a good place to put it. Another line that you could look at, and it goes right in line right here, the 23.6% on your Fibonacci retracement is right in line with an area of resistance here, which could now be potentially support. We have resistance and resistance. So this would be the closest area that I'd feel comfortable basically putting a stop loss in the market. I think if you go any higher, which there is an area of support right about here, but I think you're getting a little too close at that point. But let's just take a look at what it looks like if you put it below the 23.6%. Right under it, your entry is about 80 pips up. So 80 pips, and you're looking to gain about 328, 330 pips. So the return on that, the risk to reward is amazing for this trade. And this is a way to take the weekly time frame, bring it back using Fibonacci retracement and Fibonacci fan, and being able to basically grab a piece of the market, snag a piece of the market, and do it very precisely. Well, that about does it for today. Until next time, this is Jason Fielder. Good trading.